Stress for the average American is higher than ever. Over 60% of Americans are living paycheck to paycheck. Costs are going up. I don't know how some folks are doing it. Just because I tell you I'm paying you 2 weeks doesn't mean that that's exactly what you need to take care of a sick child or to go from point A to point B. Financial wellness has tried and failed. The solutions in the market today to try to solve the financial literacy challenge have simply just not been effective.
This week, we're joined by Ryan and Mang, Chief Commercial Officer at DailyPay, the platform improving the financial lives of millions of American workers with earned wage access.
Just because you're earning over six figures doesn't mean that you have the ability to budget appropriately. Really anyone who is experiencing some level of financial strain, they have the ability to tap into those wages at any time.
Hello and welcome to another episode of Money Travels presented by Visa, where we explore the extraordinary innovations in digital finance, transforming lives and livelihoods everywhere. I'm Rich.
I'm Max. Ryan, welcome to the show.
Thanks for having me. Great to be here.
Why don't we just go straight in? And obviously, Max and I are experts in earned wage access, but maybe for some of the listeners who don't quite understand that term, talk about what earned wage access actually is and kind of what DailyPay do and your standing in this industry.
Yes, very simply put, earned wage access, better known as on-demand pay, allows workers to access their pay in real time. And what that also means is that if someone is on a biweekly pay schedule and they need access to those wages faster than that schedule allows, they have the ability to tap into those wages at any time. So it's a more convenient way for a large majority of workers to access wages through their employer.
And am I right to assume that it's primarily targeting people that are paid by the hour of work done versus by the task?
It's accessible to everyone. We see salary workers adopting the solution. We see hourly workers adopting the solution, gig workers, freelancers, really anyone who is experiencing some level of financial strain, which comes in a lot of different shapes and sizes. I mean, we have heard every story under the sun. Just because you're earning over six figures doesn't mean that you have the ability to budget appropriately, and you may need to access those wages in real time for an emergency situation, whether it's medical, whether it's personal. It could be a variety of reasons, but we've seen it really resonate with all different types of workers. So unfortunately, sometimes it has this stigma of just being available to the hourly or the, call it part-time or the freelance audience, but it's really available to anyone and everyone.
You touched on something that is super important that we keep talking in this show, which is, nobody moves money for no reason, right? And you just like started to tap into that. Can you unpack a little bit more of like the purpose behind DailyPay and what are those key reasons why people need, a solution like that?
Yeah. So if you think about just the broad category of fintech, what is fintech designed to do? It's designed to take on very, very big financial challenges. It's designed to disrupt archaic processes. And, call it the legacy payroll processing is no exception to that rule. So I spent a decade at ADP. Most of our companies were on monthly, biweekly, semi-monthly pay schedules. And you were sort of fitting workers into this like perceived payroll box. And I think what happens when you try to do that is you cause a lot of, call it financial disarray for those that simply just can't wait for that paycheck to hit their account. So what do they do to react? They take on more credit debt. They may take a payday loan. And in some cases, the payday loans could be predatory. There's a lot of sort of, horror stories about that. I think the other thing you have to think about is payroll schedules aren't necessarily set up for real world realities and meeting people where they are in their own sort of financial lives. Just because I tell you I'm paying you 2 weeks doesn't mean that that's exactly what you need to take care of a sick child or to go from point A to point B.
How much do you look at the work you're doing and look at it? It's not just access to wages, but this is around kind of financial literacy and helping people, I'm guessing, kind of budget a lot better. As you said, like, who knows what's around the corner in terms of if you've got kids, if you've got whatever. So how much of what you're doing do you think is aimed at that kind of education of people's finances?
Great question. The solutions in the market today to try to solve the financial literacy challenge have simply just not been effective. So I could just list a few. So 401ks, a history of, call it, financial wellness solutions that are really education solutions. But the problem with those solutions is if somebody's not feeling financially stable, it's very hard for them to take a step back and try to learn about a next step forward, whether it's learning a little bit more about how to build credit or learning how to budget appropriately, or should I dare say, learning how to invest someday. They are just not even in a headspace to be able to do that. So we have always looked at DailyPay as sort of this enablement mechanism to get them to where they need to go. So if I stabilize first, if I feel like I'm in a place where I can actually go to work, be productive, then I can take a step back and also say, hey, how can I budget more effectively so I'm not actually having to access my wages faster than I should, or maybe even setting some of these wages aside for something that's a little bit more meaningful downstream. So whether that's a kid's birthday, whether that's retirement, whether that's a vacation, or even just building credit. So I think we've always looked at DailyPay as that gateway to financial freedom for an audience that has been, for all intents and purposes, ignored. 401ks are a pre-tax and post-tax retirement vehicle. So 403bs are also a retirement vehicle that are offered through nonprofit organizations, as an example, throughout the US. So those are your two main retirement vehicles here in the US. If you look at 401k solutions in the market today, the adoption rate from the audience that we are impacting is next to zero. So if an employer offers something like a 401k match, it's not being taken advantage of. So an opportunity for even someone to participate in a 401k is going to largely be predicated on someone's ability to be stable in their own financial day-to-day, if that makes sense.
So you guys have been in business for about 10 years?
About 10 years, yes.
I'm guessing it's always been an issue, but I'm guessing with kind of cost of living crisis over the last couple of years, now is a pretty interesting time to be working in this space.
Yeah, look, stress, I think, for the average American is higher than ever. Over 60% of Americans are living paycheck to paycheck. Costs are going up. In some case, I don't know how some folks are doing it. So the fact that we are offering temporary leading to permanent relief is a very sort of good motivator every day for me personally. I don't know. Sometimes mission-driven businesses can get lost. I think DailyPay truly is on a mission to do right and to get people on a better financial path and to make people more productive. So companies love this solution because their workers are showing up more engaged. They're excited to be there. They know there's a purpose for them being there. If they don't know how they're going to get home that day because they don't have enough money to get a bus ticket, it's very difficult for that person to be 100% engaged in that day-to-day activity. So I would say with like the outside pressures and then just natural internal pressures, it presents a challenge. And I feel like we are helping people get on a better path.
When you talked about your customers and how your customers and the employers love this, I guess, is that part of the sales pitch in terms of like, will they remain competitive if you're looking, kind of 2-3 years out in the future, if they don't offer this? Because if you're an employer who's living paycheck to paycheck, surely one of the things you say is, it does my company or my future employer offer me the access to take my funds when I need them?
Well, it's a great question. And what's been super fun for me to see is that when they're going out and trying to win let's just say somebody from their competitor in any industry for that matter, it's now expected to be offered by that employer. So maybe 5 years ago it wasn't expected, and now it's expected to be offered. So that's been super fun. It's similar to the way 401ks were, maybe going back, 12, 13 years ago, where you couldn't really get away with not offering a 401k, 403b anymore. The same rules now apply to on-demand pay. So that's been really interesting. The other thing that's interesting is sort of the experience that happens after an employee has had an experience with an on-demand employer. So once they leave and they go to another employer that doesn't necessarily have that same solution, we're actually seeing a lot of those individuals try to access the DailyPay experience. Now, they can't necessarily access that same on-demand pay experience, but they're accessing some of the other financial tools. And this is an important point because once you have that engagement from this audience, and we're seeing people log into our application, anywhere from 7 to 10 times per week, which is a lot. And when you have that level of engagement, you can now start to introduce other tools that will help them and guide them to where they need to go. So savings, budgeting, credit building, like I mentioned, and someday investing. So we've seen a lot of that pull through, and that's been super, super interesting. And I think that's what employers are now starting to realize. It's, hey, we've always wanted to order a FinWell solution. And now that I know that we have their engagement through your on-demand pay tool, we can open up that tool to other avenues.
Why is it only 10 years old? The wage system in the US has changed after World War II. But DailyPay just came like 10 years ago. Why, what happened in the middle? That problem for sure existed since day one. So.
And Max is really showing his age there as well. So
yeah. Thank you, Rich. You see, I'm still very young.
Yeah, Max, I think you could probably, I think you could tie it to the gig economy in many ways. When the gig economy started to become more of a lever that certain businesses could pull, I think the demand for just, whether it's real-time payments, real-time jobs, real-time sort of awareness over what's available outside of my day job, those things just became more commonplace. And I think as they became more commonplace, the thinking around payments did as well. A little more complicated with payments than necessarily opening up new job opportunities through applicant tracking solutions and a variety of other tools just to bring awareness in. But I think that probably had a lot to do with it. Like if I'm thinking back a decade ago, there were certain companies like, just trying to think out loud here, like the Instaworks of the world that were starting to evolve by opening up the eyes to, millions of US workers that, hey, you don't have to go down the traditional job path of working from 9 to 5 every day. You can actually work over at ABC company and then, take care of your kids and then go work at night at XYZ company. So I think there was probably something there that triggered the payment space to sort of follow suit.
Big advocates and a big incumbent of the real-time market. And especially in the US, right? And you live in the US, so I would love to have your perspective on how real-time has changed things, why real-time is so important today, and really like the key things, all the key trends for you, the key evolutions that you foresee for that business model almost.
Yeah, so I think the expectations from consumers, meaning us. Whether it's mobile banking or the way we shop or the way we communicate with friends and family. I mean, everything we now expect to be in real time, and it has to be instant. Our attention spans are next to nothing, and it's just like something we expect now. So there's no difference in the world of fintech. And throughout the last decade of my work, whether directly as an operator or an investor, everybody is solving for this challenge because what speed does is it naturally creates efficiency. It creates engagement, but it also reduces costs from a lot of different angles, right? So from an employee angle, if I have access to real-time data, I can do my job that much faster, whether it's personal or company related. And my expectation is the exact same. And if I'm a company, if I'm enabling my employees to work faster, I'm naturally making them smarter, faster, and able to deliver a better service to my customers. So there's just a lot of good that comes along with speed. And then there's an expectation now, whether you're an employee or a consumer, that world should be almost identical, right? So there's also just this like whole broad topic of security as well. So, the amount of like the security, like whether we're talking about blockchain, whether we're talking about encryption, whether we're talking, there's a lot of different things we could be talking about here. But ultimately it's an expectation. So we as consumers or we as businesses just expect these things to happen. We expect things to be secure. We expect that you're going to take good care and be a good steward of my information, whether you're Bank of America or Visa or JP, it doesn't matter. Like if I'm trusting you with my money, I'm expecting these services to naturally happen. So whether it's DailyPay or any of the other fintech tools and provider, security, speed, and then just transparency across like how you're building, what's coming next, how you're going to make my life easier, how you're going to make me more productive, how is this going to benefit my day-to-day, and how are you going to keep me engaged? Like all of these things have to be taken into account when you're building any type of fintech. And it's really, really hard to do behind the scenes, but those that can do it and do it well and do it securely are winning right now. And I've seen that across the board. I mean, I spent 6 months. We got acquired very quickly by a large financial advisory firm out of the Northwest when I was at a Series Seed company called Advisor, where we were looking to provide, wealth management solutions to a much broader audience, or an audience that maybe never had the opportunity to sit down with a wealth advisor, either because they didn't have the funds that were interesting to that wealth advisor, or maybe they just never thought of doing it. And I saw it then as well. Anything with money requires trust, it requires speed, it requires engagement. So no exception to that rule here.
And you're 100% right in terms of like the world in which we live now. There's an expectation that things are on demand at your fingertips. Thanks to mobile, smartphones, etc. as well. Are you seeing maybe some of the younger employees who are kind of born into this kind of world of fintech, expecting that they'll be able to have, to your point, that their employer of choice must have? Surely they must have, because that's like a their bank not having an app.
Yeah.
And do you see, like, obviously an adoption rate in the younger generation much higher than adoption rate in maybe people who are slightly older?
No, I think the ability to download an application that your employer is recommending is pretty widespread now. I'll just tell you a quick story going back again to my ADP days, and everyone was downloading the ADP payroll app. Why were people downloading the ADP payroll app? Because they wanted to view their pay stubs. And it was the most downloaded app in like the human capital management ecosystem by a long shot, right? And if you tell someone that they can view their pay in real time and know exactly where they stand, I haven't seen any discrepancies in the data that's telling me that is going to be applied more so to 20 and 30-year-olds than it is to 40, 50, 60-year-olds. So I would say that if anything, someone's ability to understand what the tool can deliver above and beyond just looking at your on-demand pay is even more interesting, because people are at different places in their own financial journey, right? So if you're younger, you may be just more concerned about drawing down some funds to, I don't know, to take friends and family out to dinner. Whereas if you're, maybe a little bit further down the road and you have a few kids, you may be more concerned about saving for a family vacation, right? So there's not a tool that you fit a bunch of people in and you expect it to work. They all have to sort of use it to where they are in their own sort of financial lives. And I think that applies up and down the age spectrum.
We've talked a lot about the US. Obviously, that's where you guys set the business up. And
yeah.
I think Max and I find this interesting, talking about an earned wage access kind of problem that you guys are servicing with a bi-monthly pay run. And UK, Europe, we both get paid once a month, and the majority, I think, of UK employees kind of once a month. But you guys have just come into the UK. How's that been? Because you've kind of said, right, we've got this issue. People only get paid twice a month, and now you're speaking to kind of Brits, Europeans who are saying, lucky you.
Look, we are just like every other, call it US founded, US based company. We are, ready for the international market. So we are ready to take, I don't think the challenges are all that different in the UK and Canada and across the globe in terms of the pressures that people are feeling. And I think if someone needs access to their money, we want to be able to give that to them in a way that's not going to sink them down the road. So whether that is like a high interest rate credit card, whether that is a payday, or just maybe taking a loan from a place that you don't want to take a loan from. I don't think that story really differs over the pond. unless you guys would know better than I.
No, not at all. Listen, I spent like a few years in working in the US, and I got used to kind of the bi-monthly pay runs, and it is like you get used to this, and then going back to the UK, it's oh no, it's the end of the month. I've got to wait to the end of the month. So you got to rearrange your finances. You got to think through budgeting. It'd be really interesting to see like the adoption that you get from the UK. Just speaking personally, I think whilst kind of financial education and financial literacy is still a challenge in the US, I'm someone whose eldest son is about to go to secondary school, and I'm terrified that I don't think this is my personal opinion that the UK have done a particularly good job on kind of educating our younger generation. Certainly, I've failed as a parent, and I've just started that journey. So it'd be really interesting to see what that kind of uptake is in somewhere like the UK, where I personally think that we've got a bit of a way to go in that financial literacy.
Trying to reflect on the other markets in Europe, but also overall in the other regions, because you mentioned something that is very important, and for the audience as well to appreciate. The package and the way you pay it is very different, right, from a market to another. And employee benefit is a big thing in the Anglo-Saxon market. And it's not as developed in other markets, right, where a lot is more, a lot of the focus is actually on the baseline, on the base salary and probably your bonus, but less on the benefits. Where the Anglo-Saxon market, that these are tangible benefit that actually employees and employers value very, very, very much. So that would be really interesting to see, like beyond the UK, how that model can expand and how you can actually educate the market that are not used to the employee benefit to actually benefit from that and see that as a true advantage and a true reason to join a company. It is a reason to attract employees, but also to retain employees.
Yeah, I mean, look, the attract, retain, recruit story has been circling around the HC, like the human capital management, financial wellness. Those are the buzzwords that you hear over and over and over again. Like if the three of us typed it in Google right now, there'd be 10,000 companies that came up. I think the important point to note here is that financial wellness has tried and failed a dozen different times through employer offered benefits across the globe, not just in the US, but across the globe. And it's been done in a variety of ways. I mean, it's been, I mentioned some of this to start with, but I've actually seen it pull through with health savings accounts. I've seen it pull through with flexible spending accounts. I've seen it pull through with like separate education series, and no one is engaging it because it's not capturing attention. So you have to capture someone's attention before you can even think about taking them down an education path. And that's the most important thing to note here. It's like modern education, right? So do we think in 10 years from now, you're going to be able to sit students in a classroom with a teacher and have them absorb all that information and have them take that information and do a job? Absolutely not, right? There's going to be different forms of engaging students that's already happening right in front of us. There's no difference here. Whether you're a mature adult or someone starting out in their career, if I want your time, I better have something meaningful to put in front of you for the 15 to 20 seconds that I have with you. And what better way than to show you, hey, Rich, you have $150 earned for the week. What do you want to do with it? Do you want to leave it there? Do you want to take it out? Do you want to push it to a savings account? There's a lot of really interesting levers that that the fintech world can now pull because everything's right here for us. So capturing engagement within 15 to 20 seconds, I think, is probably the name of the game. And that leads to education journeys.
I think I've got a friend of mine in a completely different industry. He's in kind of FMCG, but he looks at this as, because, let's face it, kind of payroll is not really a sexy market. But I think he sees huge amounts of kind of appeal and value creation in kind of an unsexy market, taking it and doing all the stuff you've just talked about in terms of we can actually make this some proper value creation for the end users in just a kind of mundane activity of payroll. Yeah. Going back to kind of like Max's question earlier when he was kind of reciting his history of World War II, you've been in existence for kind of 10 years and I think you guys were kind of one of the pioneers of this space. What's stopping, this is your chance to kind of give us the kind of the DailyPay pitch really, but what's stopping like just normal payroll companies doing this themselves? Why can't they say, well, actually, can't we just pay our employees when they want to be paid?
Well, listen, most of the payroll, so again, going back to my ADP days, most of the foundation that those payroll systems are built on only allow for a certain level of, call it payment flexibility. So like their ability to pay people on schedules allows them to scale systems across enterprises. And there have been, call it hundreds of what the world would deem point solutions that sort of plug in to these broader enterprise platforms, because these broader enterprise platforms aren't really set up to solve these very pointed use cases. So I'll just give you one quick one outside of payments, and then I'll bring it back to payments. So in the US, healthcare is obviously very, very important and varies from employer to employer. And there's optionality there for employees, and understanding what those options are and what might be best for your family is quite important. So most of those platforms offer an onboarding or a benefits administration solution. The problem with most of those solutions is that they don't actually take that person through the right type of education or the right types of scenarios or something that might help them make a more educated decision for their family. So there was this new category created called decision support tools that was just not simple, but it was a tool that layered on top of to help these employees make better decisions for their families. And there's a whole category in the US for benefits administration decision support tools. So that's just a small little example. There's no exception. Payments is way more complicated, way more complicated. So I think that is part of the reason why the payroll companies have, like, quote unquote, I don't want to say stayed in their lane, but I think it really is. I mean, they've all at this point have decided to partner. And because API and integration has frankly gotten so good that once an employee experiences something, whether it's with DailyPay or another solution that is working on something very specific, once an employee has that experience, it's really, really hard to tell them, hey, our payroll provider is now offering something. It's not as good and it's not going to give you X and Y, but it's pretty good and we're going to use it just because. I think they've sort of said, hey, we're not going to go down that road. It's not worth the investment. Let's let the expert in the category, the company that created the category, continue to offer that awesome experience, because ultimately, if we're fully integrated with a DailyPay, they are going to be not only happy with the DailyPay experience, but they're also going to be happy with us, because we've offered that seamless experience between what we do best and what they do best. So I think that's the primary. It's not to say that one of them might not try to offer something like us down the road. That would be ignorant of me and ignorant of the industry. But right now, that's my answer. I feel pretty convicted in that answer. And I feel I probably am a good perspective on that because I did work at the largest payroll provider in the world for a very long time. I also think it's coming back to what is truly tangible for the worker, which is, I think, is what you're saying. So a lot of these, broader human capital management platform are designed for the employer. They're not necessarily designed for the employee. Like we are set on solving for the employee. Like, we want to make sure that they are seeing 100% of the benefit so that when they go to work, they're more engaged, more productive. And that employer is not only able to see the return from offering something like DailyPay, but they're also able to see someone get out of probably a pretty turbulent situation and just start to do more interesting things in their financial life. I think I would like to think that most of us humans want that for other humans.
But also, there are other kind of benefits to the wider economy of people having, being able to draw down that money and to keep, the I guess the bedrock of the economy kind of booming in terms of people spending at small and medium kind of enterprises.
Yeah, absolutely. If people are spending more, the economy is healthier. It's pretty straightforward, and I think if we're putting more discretionary income back into the pockets of the largest audience in the U.S., that's a very, very positive thing, and that's only step one. So if they're taking those dollars and investing, that's a very positive thing. If we're setting them up for retirement, that's a very positive thing. So these are very, very good thing for the largest population in the U.S.
What's left to do in the U.S.? Like if you were to give yourself a scorecard, where are you? Are you like a B, B plus?
Yeah, so I still think we are in the very early innings of a true end-to-end financial wellness solution for the audience that we've been describing. Um, look, not to bring it back to the 401k comment from earlier, but look no further than the 401k. If you look at adoption of 401ks and the level of income you need to have in order to even think about a 401k, you're missing a huge percentage of the U.S. population. So if people aren't naturally saving, then that is going to naturally lead to downstream challenges that we've been talking about throughout the podcast. But I think we are very early innings on a true financial wellness platform that is solving for budgeting, solving for saving, solving for investing, solving for knowledge, solving for credit. The list goes on. So I think we'd like to bring a lot of that everywhere. So internationally, and I think there's more for us to think through in the US. I also think just the way people work in general is going to continue to evolve. So I think the gig economy is not going anywhere. I think it's going to continue to grow. I think there are more and more employers that are accepting of the fact that, look, if I understand someone's work history and they have proven that they not only show up to their day job or night job, but they do a great job, that I'm okay with that person coming in and doing a job for me. And I'm just going to make that a part of my operating rhythm. And that is going to be a much more, efficient way for me to do business. I mean, think about restaurants. I mean, the average tenure is like less than 90 days. So how are you going to solve for that? Right? You have no choice but to think about these different solutions. So I think we're a part of that I think we're going to lead the charge in that way of thinking throughout the industries that we service. So if you think about hospitality, manufacturing, healthcare, the list goes on. All of these industries are ripe for a new way of employing labor, thinking through the different types of workers that can service different types of jobs. I mean, we've always thought about the gig economy servicing sort of low skill jobs. I think that is going to change very quickly. I think with the advent of AI, it's going to make employers or give employers the ability to present, call it what today might be considered a higher skilled job, might bring that to a broader audience. And they're going to have to be prepared for that. And I think we're going to be a part of that.
I'm still fascinated by the fact that you are, in your own words, kind of in early innings stage, even in the US, and it seems like it's less the tools that are out there, but more kind of, I guess, the education and the almost kind of cultural transformation that the market, the world is going through as it adopts these new tools, as you said, to gig economy kind of impacting how, where people work. Short term, and by short term, I guess I mean 12 months. Where's the big focus for DailyPay? Where do you think kind of the biggest value that you can create is? Call it in the US, and then I'll ask the same question kind of in one or two other markets globally. When you get together as a kind of leadership team, where you think we need to focus here, because is it around the education? As you said, 60% of people living paycheck to paycheck, and you can do your best to capture market share in 10 years, but this is a mission that you guys are on.
Yeah, I think the sort of the macro answer to that is we want to continue to focus on being in the flow of work. So if you think about what that means to an employer, when I hire, whether you're a part-time or full-time employee, I'm taking you through an experience. We want to make sure that as that person is being brought through that experience, and if that employer is offering a DailyPay solution, that our, call it onboarding and education experience and process is flawless, but it's fitting in within the culture that company is prescribing, right? So just like Target has a certain way of doing things. Kroger's has a certain way of doing things. Tesla has a certain way of doing things. And we want to be integrated within their culture because we know that they know for what's best for their employees. And we know that if they've trusted us to be a part of that experience, we want to make sure that when we have their employees' engagement, that we're giving them the best possible education and that we're continuing to add value as both a business partner to the company and also as sort of a co-pilot to that employee that's trusted us to be a part of their financial well-being. So I think that's where all of our focus is right now, both from an employer perspective and an employee perspective. So if you think about all of the systems that are integrated into the flow of work for an employee, so you'd mentioned benefits, payroll, HR, performance, learning, the list goes on. We need to make sure that if we are within that, quote unquote, technological stack or that technological framework, that it's going to work for what the employer is prescribing, but also how the employee is engaging.
I guess it must help that there's pressure from the bottom as well, from employees saying, no, we want this, we expect this, help us learn more, help us understand more. How much interaction is there between you and not just your customers, but those kind of end users?
We have an amazing advocacy organization, and a lot of the feedback that gets pushed directly into our product roadmap is coming from that audience. So we hear it through our service organization. We hear the great, we hear the what could be improved or what we're looking for or how to make my experience better. I have never seen a company so intensely focused on the end user. Typically, you're focused on how the company is interpreting your product or how the company is integrating your product or, what like a very baseline adoption rate might look like. And sure, we look at all of those things. But when you hear it from the voices of the audience and you hear the stories, I mean, they are tear jerking sometimes. And I have also usually like when you tap into the customer service part of your organization, more times than not, they are getting calls when folks are not happy. We are actually getting a lot of calls from folks that are thanking us. And it's unbelievable. I mean, we play these live recordings on our town halls. We play them for folks that are even evaluating our company and thinking about, making DailyPay their employer for the next, 5 to 10 years. I mean, the most recent story that I've heard, which I thought it got to me a little bit, was there was a woman who had mentioned to her employer that she wasn't going to be able to afford to pay for her 4-year-old daughter's birthday. And she was looking for any way that she could to earn additional wages to be able to do that. The employer mentioned that she had access to DailyPay. She accessed DailyPay and she was able to do that for her daughter. That sort of thank you DailyPay story is something we hear quite a bit. That it's one of the reasons why I joined. It's pretty amazing. And I still to this day even get teared up talking about it just because I know sort of like the hurdles we've helped some folks overcome. It's pretty awesome.
And I think Max said this in run at the beginning. Nobody sends a payment for no reason. And we're talking about people's salaries, which is ultimately their livelihoods. It must, I guess, drive you and everybody who works with, within the industry, but especially within DailyPay, to think that there is so much more to do. But as you learn that this is a kind of global challenge, that must be pretty invigorating.
It is. And if you take it back to sort of how the company started, why shouldn't every person have access to their wages when they want it, how they want it? I mean, it's if you ask the question like that, it's
seems simple now, right?
I don't know why.
Yeah. And Ryan, it's clear that you're passionate about this and everything you've done in your career. It seems like this is really energizing you and keeping you motivated. So fast forward 10 years. I'm asking you to look in your crystal ball.
Sure.
What do you hope that you can look back on that you guys have achieved at kind of DailyPay? And what does the world look like then if you were, if this was your world, you had your say?
I would like to see a much more evenly distributed, call it world of folks that are able to save on their own, meaning not look to the government, not look to like emergency scenarios, not look anywhere other than what they've been able to contribute on their own. And I think we are going to play a huge part in helping people do that. And that's going to probably pull through in things like, I don't know if 401ks will always be, the savings mechanism for, the broader, call it US and international audience. But what I do know is that whatever that vehicle is, us seeing those contributions go up in a super meaningful way for the current audience that's living paycheck to paycheck, I think would be a huge victory for DailyPay, because that means that people have taken control over their finances. And that means that people are now in a place where they can actually start thinking about the future. And that's a very healthy way to live, in my humble opinion. So I think that would be a great victory for us, which is a far step away from our sort of core product set. But that would be a victory in a decade from now.
I think that's a pretty good victory and a pretty good note to end on. I think the last question for Max and I, so we always ask this question. We like to extend an invite to one or two people from you that you would like to hear from on kind of this show. Have you got kind of one or two people in mind that you say, I'd love to hear from them? And obviously if you have a topic for them, we can ask them the topic.
Yeah, absolutely. There's one individual that I worked with at a previous employer. His name's Chris Call. He worked at Newfront Insurance. Newfront was an insurtech merger between an amazing brokerage out of the Pacific Northwest called ABD Financial, and insurtech in San Francisco called Newfront. They merged. I actually joined the CRO right at the time of the merger. But the gentleman who was leading the 401k practice was a gentleman by the name of Chris Call. Chris's perspective on the retirement universe is probably the best that I've heard and seen. So I would definitely, like, he's super, super smart. He's super personable. He would be great for a podcast. And I'm sure he would. I haven't spoken to him in a little while, but he's just like a name that comes to mind. He would be great. The other direction you could go is if you start thinking about like how this is all integrated with the gig economy. And the different financial tools that are becoming available to gig workers, having someone from the gig industry, and I have, many people that I would recommend as well. Like the COO from Gig Pro, his name's Brent Dana. He's amazing. I'm sure he would welcome the opportunity to talk to you guys. It would be a very, very interesting person to have on as well.
Fantastic. It's a great suggestion. Thank you.
I enjoyed the conversation. You guys are super, super easy to talk to, and I appreciate it and grateful for the time. I really am.
So that's it from Max and I this week. To keep the conversation going, you can follow us on all of our various social media handles, which are shown at the bottom. And of course, don't forget to follow the show on Spotify and subscribe on YouTube. Be nice in the comments, but tell us what you think.
If you enjoyed what you heard today, why not leaving us a review? Tell your friends, or still do both. We will be back next episode to explore more life-changing innovation in digital finance. Stay tuned. See you soon.